Yo, what's up, ladies and gentlemen? Welcome back to Vussy Supreme Traders. It's your boy Vussy. Magz, you already know what it is. It's about the money, and nothing else, right? So if you're new to the channel, go ahead, subscribe, like the video, click the bell notification icon so you don't miss any of the future drops, you feel me? If you've been subscribed, welcome back to the team, you feel me? You already know what it is. It's the money team. Alright, so check this out. Before I go into this topic, you already saw the topic on the title, I'm sure. Before we go into this one, I just want to say, man, tomorrow is the last day before I kickstarted with the thing, with the price action reversal strategy course that's going to be out on Saturday and Sunday for all the members who are joining the VIP thing, the VIP mentorship. And the VIP mentorship is going to be like a 120 days subscription. It's a 120 days membership, so once you join in the team for 120 days, and my only thing there, my only aim there is not to just send out signals and stuff like that, but I'm trying to build you up to at least get to my level, if not more than that, you feel me? So we're going to be kickstarting it tomorrow with the course, like I said, and to just find out more information about that, it's going to be in the description box below. Let's go ahead and get it. All right. How to actually manage a trade. That's what we're going to be talking about today. So let's actually get right into it. All right. So first things first, ladies and gentlemen, account size matters, right? Account size matters. Whether you have a big account or a small account, it does play into action when it comes to you actually opening your trades and stuff like that. So with a big account, obviously you can take more risks, right? You can diversify your trades. What I'm trying to say is you can have a commodity trade open, you can have a currency trade open, a major, a minor, and all that kind of stuff, right? But now with a small account, you have to limit sort of like the number of trading opportunities you can take. Of course, you can have a watch list, and say on a particular day, your watch list is showing you like 4 different opportunities. Just because of your account size, now you have to tone it down to the best 2 or the best 1 and run with that opportunity, because your account size would simply not allow you to do that, right? So once you know that, then that's like the first step towards like good trade management, because now you're gonna limit the amount of trades you can open, or if your account is fortunately big enough, then you can just like take more risks and take your money into all these different instruments and stuff like that. But that's the first thing you need to know. You need to first be aware of your account size, and don't let people tell you that account size doesn't matter or anything like that, because that's purely a lie. So you need to first be aware of the amount of capital you have and how you can like grow that, right? And if you watch the previous video I just dropped, you'll see how to actually calculate how much a lot size is going to make, or a profit or a loss is going to make, and stuff like that. So you need to go watch that so you can know how to implement that, because that's gonna go directly into this first step, which is know your account size, right? Always assume a loss, right? Always assume a loss. What does that mean? You need to always tell yourself the trade is gonna lose. I'm not saying go into losing trades, like knowing that this trade is most likely not gonna yield profits, but before you open a trade, just assume the trade is gonna be a loss, even if it's a good trade, no matter what or whatever. You feel me? And this is only gonna help you when it comes to one thing, which is TP and SL. Now that you've accepted that, because any trade can go haywire. Like we do what we do, and then the market takes over from the point that we press the buy or the sell. After we press that buy or sell button, everything that happens after is not within our hands. Like we just leave it to the market to do its thing. So once you internalize this law, it's a principle, it's a law, whatever, about the markets, then you will realize it doesn't make sense for you to not have a TP and an SL, right? And when it comes to the TPs and SL and stuff like that, you also need to set them at the right place. Just because market moves in support and resistances, and you don't need to highlight all of those things. You only need to focus on the key levels, right? And I think on the next video I'm going to talk about identifying these key levels so you can set your TPs and SLs at the right places, if you feel what I'm saying. So one thing I don't think I've spoken about enough in this channel is the fact that you need to trail your stops. Trading stops, what does that mean, fam? So basically, a trailing stop, right? You open a trade, and as soon as you opt for the trailing stop, it basically, if the price goes higher, say you're in a buying position, if the price goes higher, your stop loss also goes higher. So eventually, if the price does go against your trade, it's gonna get triggered. It's gonna trigger the thing. It's gonna trigger the stop loss, and all that upside you already made in profits, you're not gonna necessarily lose all of them, because as soon as the price goes up a little further, your stop loss also goes up a little further. I don't think a lot of people are aware of such things and such tools and stuff like that. But with trailing stops, I've only been able to use them with a thing. I've only been able to use them on the MetaTrader for PC. So I don't know if you guys can let me know in the comment section, can you actually implement the trailing stop in the mobile platforms or whatever? I'm not like so savvy when it comes to the MetaTraders or whatever. I only know what I need to use. You feel me? So if I'm trailing a stop on a trade, I'm doing it over PC. You just go to the where you set the TP, the SL, where you set the SL, and then you just right click and go to trail stop, and then it's gonna tell you want to trail it by how many pips or what. I think I might just do a tutorial on this also, but that's if you guys want to see that, right? And then say you trail your stop loss with 100 pips. That means if price moves in your direction for 100 pips, then your stop loss will also rise or lower in that direction. So eventually, if the price does decide to turn against you or whatever, you're not gonna lose all the profits you've made. You're gonna secure a little bit of something there. So it just kind of helps also. You feel me? So if you guys want to know more about trading stops and stuff like that, just let me know in the comment section below, and I'll be sure to make a video about this, right? So the next point that I want to talk about, which is compounding trades. So I'm sure you guys have seen that when traders open a whole lot of trades on the same like instrument, right? And then it's like GBP/USD, like 10 trades or whatever. And then you feel me? Like when it comes to compounding trades, I found that for me, it works when I'm riding a trend. Feel me? Let me explain, right? It doesn't make sense for me. Well, I've tried this way of trading also. I've tried it, but it didn't work for me. So I can only talk to you in terms of what I've experienced in this streets, right? I can't tell you about something that someone else has experienced or whatever. I can only talk on my behalf. Feel me? So when it comes to compounding trades, I've realized when you open a lot of trades at the same time, like fam, it doesn't really make sense, because initially when you get into a trade, anything can happen. So you find someone with a $20 account or $50 account opening 8 trades on the same thing. Even 4 trades for me, I feel like it's too much or whatever. I just believe like if you want to open a 0.50 or a lot size, a standard lot, which is 1 lot, I don't believe in opening like 0.10, so like 10 times, so I have 10 trades or whatever. I just believe in opening that 1 standard lot trade. You feel me? And then I'll probably add as I write the trend, right? And I'm gonna include a little video here to show you what I'm actually talking about when I say compounding trades, right? Alright fam, so we're gonna talk about compounding trades real quick. I just want to show you the trend that we have here, right? So we have a downtrend. I'm just gonna go to the daily. We can see, okay, basically from there, that's when we've been in this downtrend, because we're this high, low, lower, swing high, and then now we're making a low formation. So going into the H4, you'd only wanna buy when the market goes down, right? So say for example, you drew this reversal zone here, right? If you drew this reversal zone right there, that means on this breakout you would sell, right? Then you let the market do its thing, and then we get to this zone here also, where there's this reversal, right? So you would compound here, open another trade, right? And then now that means you'll be holding 2 trades, as opposed to you opening 8 trades here when you don't know how the overall trend is gonna play out. You feel me? Yeah. So did you just see what I was talking about? You saw, yeah. So what I was actually telling you is, but I've already explained this, but since I like explaining so much, I'm saying it's better to compound your trades at these levels where now the price is continuing to push, than to compound your trades like at the first point of your entry. So if you're gonna enter a trend or whatever, compounding your trades at the starting point is way riskier than gradually compounding as the trend continues in your direction or whatever. You feel me? So now I'm going to talk about the last point that I have, right? So say your trade takes a loss. If your trade takes a loss, there's no point in chasing that market and trying to make money back or whatever. That's how a lot of people lose accounts or whatever. If your trade loses, move on to the next one. Don't even take it personal or whatever. Sometimes you did really prepare in every way, right? I still see it even today. Sometimes you prepare for a trade in every possible way and it just doesn't go your way, it just goes haywire. So you can't take things personal, fam. I'm telling you, there are periods when maybe you won't understand it because you haven't been in the markets for too long, you feel me? But once you've been in the markets for too long, you realize there are periods where you like, it's kind of like you lose connection. You lose the connection you have with the markets, right? And then you think, nah, this ain't working out because of the number of losses you're gonna take. That's what a strategy is, fam. It is the point. It is times when you're making so much money and stuff, and then there are simply times where you're gonna get a little frustrated. That's normal. It comes with the territory, and nobody should even get involved in this market if you're not gonna be willing to like go through all of those things. So I'm just trying to say, like, when your trade takes a loss, don't even take it personal or whatever. If you know you followed all the set of rules in your strategy, right? So if you guys have any more like points or ideas that you wanna mention, just go to the comment section and also leave it there or whatever. I know I've just talked about my experience, but I'm sure there's a whole lot of things out there also which you can do to better manage your trades and stuff like that. But I've just felt like these were the core 5 principles that I would like tell anyone to start looking into immediately. And if you don't have a PC, then I don't know if you can really trade stops on a mobile platform. That's why I'm asking you, if anybody has been able to do it or whatever, just leave it in the comment section. But I don't think it's thing, and I think it would be a wise investment for you and everyone to get a laptop, because I do analyze on the phone and I'm using an iPhone. It's way better than when I used to do it on an Android. I won't lie, but every time I do it on the PC, it's just 10 times, 100 times better than when I analyze even on the iPhone. So I would never call it a bad investment for you to get a laptop and do the thing and use it as a trading tool or whatever. It's gonna definitely help you improve and see the market more clearer because it's a bigger picture, you feel me? So that's all I got for you guys today. Consider the last point we just talked about as a bonus. The laptop thing is just a bonus from me to you feel me? I'm gonna try to be making a lot more content. I think I'm gonna make my last 2 videos this weekend and then next week or whatever, and I think we'll just meet again next year or whatever. So either way, if you're rocking with the boy, I appreciate y'all. Supreme gang, it is what it is. 4L, Supreme 4L, you feel me? So go out there, subscribe, like, comment. I'm gonna see you guys in the next one. Alright, peace out, fam.